Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Welcome, everyone. This is Steve Meizinger. Normally, I'm your host, but today I'll also be the presenter. I'll be talking about FX option strategies for your investment portfolio. Happy New Year to everyone. So this is our first webinar of 2009. I hope to see you back at many of, hopefully all of the presentations. But if you can't catch them live, you can always sign up for the archives. You can listen to them. We have podcasts. We have our weekly outlook. We have lots of things going on. www.ise.com/FX. And you can check out all the interesting educational material that we've created to help you understand what's going on in the FX market and how you can trade right through your equity options broker. And you could trade the 6 pairs that we're currently trading, and maybe we'll be bringing on some new ones. So, again, Happy New Year to everyone. I'm really pleased to be presenting today FX option strategies for your investment portfolio. So the format will be that I'll be talking for about 40 or 45 minutes, and then the last 10 or 15 minutes we'll be doing some Q&A. Of course, 2008 was a wild year. The market sold off over 50% at one point, and commodities were down quite a bit, especially crude oil. But again, you can trade your view of the U.S. dollar right through your equity options broker. We think this is a very exciting time to learn as much as you can about FX options and implement your favorite strategies. Of course, you want to get a copy of the characteristics and risks of standardized options. You can go to www.optionseducation.org, or you can actually call 1-888-OPTIONS to get a copy of the characteristics and risks of standardized options. So what moves the currency markets? Well, some say it's the current account balance, but I like to say that it's a bit of both. Fundamentals, technicals, because obviously the U.S. current account balance was getting a little bit better as the economy was sinking, but not all that much better to have the dollar rally 30, 40, 50% against a lot of the majors. Some say it's interest rates. Well, why was the dollar rallying so strongly, even though the U.S. was pushing interest rates down the most? So there's a lot of factors that go into the foreign exchange market, and I think as you learn more and more about it, you'll be able to implement your own specific strategies, and hopefully you'll be able to hedge a bit of your risk or take advantage of some opportunities. Ultimately, it's supply and demand, though, that determines a currency value in the shorter term. Many factors, of course, that's why you want to look at the technicals a bit, but also understand the fundamentals. So if a country's economic outlook improves, there's going to be a surge of interest. Now, this is good and bad. As what we saw in 2005 and 6, 7, many people investing in countries like Australia, the UK, thinking that the economies would grow and grow and grow, and they did for a long period of time. And then, of course, we saw sort of the bubble burst. And when that happened, their currencies actually went the other way. So they rallied for quite a bit of time, and then they sold off. So you want to look at a lot of different things. This is not one-dimensional. But I think that currencies are interesting, very interesting, because they seem to play out over a longer cycle. It's not just a one-week trend or a one-month trend. Again, that's up to you and how you look at these markets. But because the currency markets are the largest market, in total in the world, they seem to have a pretty long, what I would call life cycle. It takes a while for the trend to play out. So how you determine the trend, that's up to you. But the currency markets are a very interesting place to trade. Very interesting comment from Milton Friedman. He once said that a central bank can control its exchange rate, its interest rates, and control its money supply, but it can't control all three at the same time. Well, we saw that the governments all throughout the world really couldn't control what was going on there in 2008. Let's see what happens in 2009 as they're using some quantitative easing, and we'll see what they do on the fiscal side also. Risk isn't binary, though. You want to remember that. As sometimes we think there is either a tremendous opportunity or tremendous risk. Remember, it's a balance. So each and every day we need to balance the risk-reward relationship. And these mathematical models, they work well. I won't say that they work perfectly. Obviously, we all know that there are flaws in any of these models. So you want to remember that when you're trading any kind of product. And that's why I like it when I'm trading options. I want to trade options with limited risk because at least I know what I'm risking. The theoretical view of the foreign currency markets, currencies are a means of payment and create a relative price of equal goods in two economies. So the exchange rate becomes a factor in the global competition. It's ironic, though, because as I was saying at the beginning of the webinar that the U.S. economy was arguably the weakest, and then what happened was that the U.S. currency actually strengthened against a lot of the country. So things don't always play out as you would perfectly expect. The models are, they make some assumptions that aren't always correct. Strong increase in a country's currency basically translate into a cost disadvantage in the global markets. And in fact, that's what the United States saw in the latter half of 2008, that the currency was actually rallying so much that it becomes a disadvantage, at least in manufacturing. Currencies are in the news each and every day, right? Read the Financial Times, the Wall Street Journal, or your favorite website. You're going to see headlines like dollar slumping, dollar rallying, dollar holding steady. Well, these headlines are just giving you a view of what happened, let's say, yesterday. You can trade the future, right through your equity options broker. And again, the currency markets have had tremendous volatility, so you want to learn as much as you can about options. And there'll be a lot of guests here at the ISC in the next couple of months. They'll be talking about different strategies, whether it's the bull-call spread, the bull-put spread, credit spreads, iron condors, straddles, strangles. Really, you can name many, many different strategies. You have to decide which is right for you based on your own goals and your own risk tolerances. I do want to say again, thank you for all coming today for our first webinar in 2009. We're going to have many, many guests, and it'll be very interesting to see all the guest views. And I'm sure you'll learn an awful lot in the next couple of months here at the ISC. So let's get back to the webinar. Yesterday and today in the foreign exchange. Years ago, mostly banks and financial institutions traded the FX market. Today, we as retail investors can trade. So right through your equity options broker, you can access the ISC FX options. In fact, you can go to www.isc.com/FX. We have a widget you can download to your computer. I have that at my home. I think it's great every morning. I know where the currency pairs are trading. And there's all kinds of information at www.isc.com/FX.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.